Good morning, everyone, and welcome to the Morning Market Report. I am R&B Piper. This is the show where we bring you the news, the headlines, the economy, the macro, the charts, the TA, everything. You need to have knowledge right now, guys. We got a little bit of green going on today. Looks like we might get a little bit of a rally today, but I do believe it's going to end up being a trap for a lot of people. We're already starting to see some sell-off here on the markets. Taking a look here at what we're seeing on the S&P opening right now with the Dow Jones and the NASDAQ. Quite a bit of green. VIX is slowing down a little bit right here, but looking at the charts, guys, it looks like we are starting to get a nice little rounded top here. And when we get that little rounded top, that starts to round right there, that typically gives us another leg to the downside. I do think this is going to be a trap for people, but a little bit of rally today possible. We're going to be breaking all this down and a whole lot more today on the Morning Market Report. Let's get it. You know what time it is? Class is in session. Good morning, everyone, and welcome. Thank you for joining us all here. Shout out to everybody in the chat right now. We got a lot to go over today. We're going to be talking about MicroStrategies and what the risk is for them, because yesterday some FUD came out talking about their SEC filing. I've got the whole entire report. We're going to look at that. I also had ChatGPT do a little deep dive on it and explain it to me like I was 5 years old to get a better understanding of that SEC report. And then also, we're going to be taking a look at some articles and stuff about how low can Bitcoin go. You guys know my levels. We'll see what other people are saying. But yeah, let's go ahead and bring up my co-host, and let's get him going up here. It's the OC guy. What's up, dude? How you doing today, man?
Doing fantastic. Oh, such a great day today. I mean, it's sunny, it's chilly. It is just going perfectly. I mean, we just need Bitcoin to pump to 100K, and that will be my day.
I like it. Crypto Trades, I just looked at what he said here in the chat. He said, we need bear swag. I identify, I go by the pronoun King Bear, the one and only. So yeah, we'll get some, see if we can get some swag going. We need swag. I got to get with Alex O. He's got the whole merch locked down over there. So maybe, I don't know. We'll see. I'm watching him right now. If you guys don't know, I'm watching Alex O right now. Here, check it out. Look. Watching him right now. He's right there on my phone. So yeah, shout out to Alex O Crypto. Sitting here. Hope we'll see if he pushes over to us in a bit. But OC, we got to go talk about this Bitcoin chart, and then I want to get into the news. Need to reload that ticker down there. There you go. Now you guys can see real-time prices. Let's go jump into this chart. I just want to go over this, and then let's get into the news. So we got a jam-packed session today. So get your brains ready. Get your diamond brains turned on. Guys, by the way, 14 more members and we unlock another emoji. So I need to know what you guys want for an emoji. I'm thinking diamond brain. If you guys don't know what diamond brain is, I'll pull it up here to show you. But I'm thinking that we need diamond brain. It's better than diamond hands, in my opinion. Diamond hands cause people to round trip. Diamond brain stays focused on the task. So here you go. This is diamond brain. You guys let me know if you want this, or should we go with something else? There we go. Diamond brain. See? That's diamond brain over there. So, guys, let me know if you want that. It would just be the brain emoji, not the whole head, just so you know, unless you guys want the whole head. I don't know. You guys let me know. I can design us a swag line. I'm great at designing clothes. Awesome, BC. That would be pretty cool. Maybe we should think up something like that. Let's go take a look at this chart, guys. What I'm watching here, we did have this pump down, this dump down, breaking the 300-day simple moving average. We came into the 786, got one bounce here, came up. We did a little fight here on that level, but then ultimately came up. A perfect rejection on the 0.66, pulled back down beneath that 300-day, and now we're starting to do this rounded top here. So I'm going to be watching closely for rejection. Right now, 81,260, we'll call it. That's going to be a key level for us to break if we do rally up. But even if we get past that, guys, we've got quantum reactor and dynamic reactor both coming in on the 618. I'm thinking even if we break this, this is very likely our rejection point, especially when we pull over here and we take a look at what we're seeing on a fixed range volume profile of this whole price level here. You'll see, what do we have? Loading, sir. There we go. We have a point of control coming in right there at that level also. So I'm thinking that 84, 250 range is going to be a key level for rejection on Bitcoin. We'll have OC go a little bit deeper into all of that for you guys. But yeah, watch out. Be careful. Be careful. Let's go jump over into the news. And let's get into that. Let's get that going. And then let's shrink this bad boy up to about right there and jump over to that news setup. Here we go. All right, guys, let's get into the news. Let's talk about what we're seeing here on the charts today and on the market headlines. We are currently sitting right now at $253.4 trillion in the crypto market cap right now. Trend median, the median average of price action for our total market cap is 3.68 trillion. So we are currently 31% undervalued. We are at a 47.2 wristband here. And this is for my Piper Plan people out there. You guys know who you are because we are watching this for a dollar cost averaging. I bought yesterday morning right before we pumped, 6 a.m. my time, 8 a.m. on the East Coast, and we did well with that DCA purchase yesterday. Looking at the stable coins right now, and without stable coins against Bitcoin dominance, Bitcoin dominance currently with stable coins at 62.84. Without stable coins, guys, all the way up to 69.11. Bitcoin dominance is absolutely crushing it. Unemployment rate, we just had that come in recently. It's now sitting at 4.2. We are seeing rising unemployment. Let's go jump over into the crypto bubbles, talk about these levels over here, guys. Bitcoin currently up about 0.7% on the day, only up about 0.2% on the past hour, still down quite a bit on the weekly and the monthly. Well, not quite a bit. It's pretty low for Bitcoin, but only holding 15% profit year over year, sitting at $80,000. Ethereum is at $1,576, down on the daily, down on the weekly, down on the monthly, down on the yearly by 54.3%. And guys, I do believe, everyone, that we'll see Bitcoin hit that $1,100 to $1,200 range. I talked about this a while ago. So still think that that's going to be what we see with that. XRP sitting just under right at $1.95, up 1.5%. Any big movers today? Solana is up 2.7. It's at 110. Dogecoin's up 4.1. Cardano's up 5.7%. There you go. It's at 61 cents. I know everyone wants to see it get back to 70. That would be a very key level that I would be watching for it to hit there. Gets everyone bullish and then turns around and flips on them. HBAR, guys, up 11.6%. We started putting this into our DCA plan, although I am not buying any altcoins right now. Everyone says fire sell. I say, nope, still more risk. I talked about this yesterday on Crypto Princess's live stream. Shout out to Crypto Princess. If you guys have not checked out that video, it was her debut of doing lives, and I was honored to be on there. I think it was a phenomenal show. And we were talking about why I don't like buying at 90% down when I don't see strength in the market. Because when you buy into these markets thinking, you know what, we are way down, this is a fire sale, and which is everyone all over X is pushing that narrative. Like, this stuff is so cheap. Do you know what the difference is between buying something when it's 90% down and buying something when it's 99% down? A 90% loss to what you bought. Okay, so if you had $100 and you bought something that it was down 90% and then it falls 9% more, you're now sitting at, instead of $100, you're sitting at $10. You can lose 90% in a 9% drop because it's 90% lower than when you bought. So 90 plus 90, shout out to FD White. But yeah, guys, I'm not ready to buy yet. I want to see Bitcoin go into a structure of higher highs and higher lows on a minimum daily time frame. At that point, I will consider starting to look at my altcoin DCA plan. I don't need to catch the exact bottom. I don't need to start DCAing at the exact bottom, but I definitely don't want to watch it go and disappear as I'm buying. I don't want 10% left of each of my DCAs as we continue to the downside. So it just does not work. All right, let's jump over and talk about the markets right now, guys. You can see here, Dow Jones currently up 3.5%, S&P up 3.74%, NASDAQ up 4.23%, getting a nice little jump there on the NASDAQ. And guys, look, the VIX is at 36.91. It was almost up to, it actually hit 50 and then pulled back yesterday. It's at 36.9. But again, I don't like to do anything when the VIX is over 20. That is my line in the sand. So we'll just let the VIX either settle down or continue to pump. I do think we're going to see the VIX hit 80 in this cycle of the bear market, guys. Asia markets did have a little move yesterday. Europe markets yesterday morning, these things were all red. Now they all had a little green day. Nothing fancy, nothing special, but is looking better. Gold is getting another pump up here again above $3,000, sitting up 1.85%. Here's the problem, and we're going to talk about this because we've got a problem. Our 10-year treasury yield. You guys know that I believe, and I said it long before most of the people that are saying it now out there in the crypto space, actually the macro space too. They were a little late to the party. It's about this 10-year treasury yield and the refinancing of debt. I do believe this is the end goal for all of this chaos we're getting, is to get the 10-year treasury yield down so that 10-year yield can get lowered into a rate that is sustainable for a refinance on $9.2 trillion in debt coming this year. So if we are seeing this rise, this is going up, this means that people are selling. Let's go ahead and jump out of this real fast and let's go talk about who I think's selling. Guys, a lot of the Chinese yuan is built on its investment into the U.S. dollar. It really is. They know that we're the big strong guy, and so they buy a lot of our bonds. They hold a ton of our bonds. Actually, China is holding a pair of aces. They are the second largest holder of U.S. T-bills, and they have a plan to stop Trump. All the tariff wars that are going on, they know, I think they're smart enough to know that ultimately what they want him to do is, or what he wants to do is to get this 10-year treasury yield down. So they are selling all that off, which is causing their yuan to drop because they do not have that stronger future sentiment in the market of holding our T-bills, because a lot of countries hold our T-bills for their reserves, right? And so the yuan is falling. And this gives me a lot of indication that all of our T-bills, the reason we're seeing this pump up on here is because China's selling. And I think they're doing it trying to go, oh, you want to do all of this stuff to wreck your stuff? Well, what if we just sell all of our T-bills and pump your T-bill back up? Because remember, guys, this goes up when people sell. This drops when people are buying. So we could see, everyone talks about 4D chess, which is not a thing, by the way. 3D chess with Trump, that he's playing it, but China might be sitting at that table doing some moves also. So it's it looks like, I think China Piper stay happens if it's going to be bad. I'm reading Dave Brumbelow. I think you meant to say you're thinking what I'm thinking. Yeah, I think that he's going to have to drop tariffs. What could that mean if he backs off on the tariff front to keep China from selling off all of their 10-year treasury bonds so that he can get that lower rate to refinance? What would that look like, guys? Well, we kind of saw that yesterday. $2 trillion pump, a $2 trillion pump in the stock market yesterday on fake tariff news shows the market is ready to ape. If we see some pullback, excuse me, if we see some pullback from Trump here on his stance, we already seen what it could look like. Yesterday, guys, we had this news that came in, basically fake news post on X from a verified Walter Bloomberg account claimed that the White House was considering a 90-day pause on tariffs following an interview with Kevin Hassett, one of Donald Trump's economic advisors. Trump is considering a 90-day pause in tariffs, is what he said, for all countries except China. Read the now deleted post from the user, who is not affiliated with Bloomberg News, had verified badge, 852,000 followers, caused quite a stir, and the rumor was mistakenly aired as a banner on CNBC and then amplified by Reuters. The S&P 500 spiked more than 8% from its low on that news, guys. So let's talk about this. I want to jump over here and I want to talk about this craziness because we saw fake news come out. OC, you got your tinfoil hat ready? You might want to wear your tinfoil hat for this. Piper's got a theory. I got a theory here. There you go. Drop the tinfoil hats here. I think it's odd that this verified badge with all these followers that, no one's ever seen do anything comes out of nowhere, drops this little news, and then all of a sudden everyone is very quickly to go, White House has confirmed this is not on the books. Like very quickly. Like they already knew that it was out there and watching for it to hit to put out their message of, yeah, no, this isn't happening. There's no 90 day. I think it was a test. This is, as it says on the thumbnail, this is only a test. I think they wanted to see how quickly the markets would rebound and if we have to pull back our tariffs, is the market going to rally back in and cause all of this to shuffle where money comes out of the bonds? That's one. Two, can we recover the market quickly if we need to and reboot the economy? I think it did a multi-point test yesterday to test the waters on the sentiment of retail, to quickly react, respond, and what would it do to the 10-year treasury? What would it do to the sentiment of wanting to be in bonds versus stocks? Are people just going to rush back in? Are they worried about anything other than tariffs? I think yesterday was a test run, and we do stuff like this. We in the military intel side have a thing called D&D. It is denial and deception operations, and so we do things like, hey, let's have a sneeze break. Goodness gracious, sorry about that. I hit that button, I sneezed a second time. Let's send this guy in with, I don't know, we do things like a garage door opener on him into this building to see if he gets searched and found and what the procedures are once he gets found to have this. And he goes, oh, it's my garage door opener, right? But it makes him go, why does he have a garage door opener? We get to see how the operation plays out if we were to do something else, right? It's D&D. We do this. I think that yesterday was a little bit of a purposeful drop of rumor, of fake news, so that they could get that information feedback on how the markets would respond and what would happen with the 10-year treasury bond. So your thoughts on this, OC? You got your tinfoil hat on, man. Go.
So, I mean, there's two things here, and I don't want to fall into hypocrisy at this point. So let me first tell you what happens here in Mexico, right? And we need to also make a big separation between Mexican politicians and U.S. politicians and the military behind it, right? Intelligence behind it. Mexico has been hacked many, many times, and they just don't do anything about it. So the same thing happens in Mexico, but I think that in here is more like, hey, oops, we fucked up. Well, then let's go back down, right? So they always have a secondary plan. In the States, talking about that, they have this all intel, they have these procedures, and they're in almost direct engagement, let's call it like that, with China. I think this will be more, like you mentioned, a little bit of a test, right? Regardless of how it looks like, I think the backup of this and then seeing the rebound of the markets talks about how we are ready, right? I think this is part of what let me just bring back my default hat, right? I think this is a little bit of a part of what I was thinking this week, this previous week, which was I believe that Trump is going to be just flexing as much as he can, right, until the breaking point, right? And maybe when we see that breaking point, we're gonna be seeing, you know what, let's back out a little bit, and then at the 2-year point, we're gonna be seeing a big release of that muscle, right, or something like that. So I'm thinking like, hey, you know what, we don't want to start a trade war, right? Everybody is talking about a trade war. We're seeing consequences very alike, like a trade war, right? And like you mentioned, which I need to give you the complete credit on that one. When I said, well, I think we are in a recession, and you said, well, we cannot be into a recession because the actual factor for a recession, it is the jobs numbers, right? So, and I was, yep, you're completely right.
Well, it's a major factor. It's not the factor. It's a major factor.
Yeah, of course. But I mean, you cannot have it without it, right? So at least with the conditions that we are right now. So I think this is a part of this same perspective. So are we talking about a trade war? Well, how much can we push it without getting to one? Where we need to retrace, and how we're going to be retracing and consolidating what we got, right, to then push back into what we need. And something important and keep in mind is just exactly what you mentioned. I think the actual point of this is first, jumping with a stronger economy, self-economy, right? Self-sustainable as much as it can be, right? And then the second one is refinancing the debt. I think it got to highs that is just basically unmanageable, and playing it well might bring a much better benefit to the states, leading to the states being or staying at the hegemony that it is right now for longer. And I think that's not a bad thing. I think she's just like testing the waters because we don't know how the rest of the world is going to be reacting, especially when we have a single-handed decision being taken in other part of the world, such as China, right? I mean, if they want something, they just execute it. They don't need to approve basically anything, if I can say that.
Yeah, so I did find it interesting that almost immediately after that, markets get this rally, $2.5 trillion pumps into the market, and suddenly here comes Trump threatening another 50% tariff, like, all right, let's push this back down to normal again. So I really do. I think yesterday just felt a little weird. This all happened within 2 hours. Let's jump over here and take a look at this, and I'll show you what this is saying here. Oh, come back here, sir. Let's bring this up. I just want to show this, and then I'll show you guys another problem. We got another problem brewing. There's another thing coming, but wait, there's more. Look at this, guys. So something doesn't add up here. This is Kabisi letter. He says, over the past 2 hours, we now had the White House called tariff delay debt headlines fake news. President Trump threatened another 50% tariff hike on China. At the surface, the trade war situation just got materially worse. Meanwhile, the S&P 500 was trading up 200 points above its low seen before 0.1. So it's something really building behind the scenes. It just something does not match up here. It gives me that feeling of market, market manipulation, but of social engineering, right? We want to see if this, then how does everyone react so that we can know how to build our plan going forward. So like I said, seen this thing before. Let's go talk about this over here, OC. We've got another issue coming that hardly no one's talking about, but one of the people I follow on TikTok here has this. So let's go ahead and see what she has to say. We've got a debt default coming soon. And it's not the one what we're all talking about. Totally different one. Let's go check it out.
Crashing up against the debt ceiling a lot sooner than anyone thought. If you don't know what that means and you don't care to know what that means, just know it would be very bad. But here's the thing. When that crash happens is entirely dependent on you. So I'm going to explain all about that in a second, but first I want to thank
I want to get past her ad
story. And if you don't want to be a paid subscriber, yourself up. Okay, let's get into this debt ceiling stuff. Quick refresher. The debt ceiling is the legal limit on the amount of money the federal government can borrow to pay its existing bills. Not its new bills. I'm talking about the bills Congress already racked up. One party is not responsible for the $36 trillion of debt the U.S. government already has on the books. We got to that number as a result of both parties over decades. And when we hit the debt ceiling, the Treasury Department cannot borrow any more money, but the bills keep coming in. You know how it works at your house. Just because you don't pay a bill doesn't mean it disappears. It doesn't just go away. Ultimately, if you don't pay that bill, you will default on that debt, and that's when the real problems start for you. Same for the federal government. It's very important to understand raising or suspending the debt ceiling does not just authorize new spending. Raising or suspending the debt ceiling just allows the Treasury Department to borrow what it needs to pay the bills that Congress already approved. Now, technically, we already hit the debt ceiling back in January 2025, but the Treasury Department has been taking what are known as extraordinary measures, basically creative accounting, robbing Peter to pay Paul, to avoid a catastrophic debt default. But those extraordinary measures can only go on for so long, and now the Congressional Budget Office just released its report for how long those extraordinary measures can last and when the debt default is actually going to happen. The soonest it could happen, according to the CBO, is late May, early June. And the latest would be August or September. Now, I know you're probably thinking, what the hell, man? Why can't they be more specific? Because of you. Yes, you. That crash up against the debt ceiling exact date cannot be determined until the Congressional Budget Office sees how much money in revenue the IRS collects in your tax money. Once that number is determined, they can do all the complicated math to figure out when the debt default will happen. So if the IRS does not collect enough tax money from all of us, that default will come sooner in May. And if the IRS collects more tax money, then the default would come later in August or September. Make sense? P.S. I will email that debt ceiling report from the CBO out in my next FaxHQ email. So again, I told you it's a good resource. Make sure you sign yourself up. Now, I'm not going to go into the catastrophic consequences of the United States defaulting on our debt and what it would mean for you and me in this video. I have a bunch of other videos that runs down the scenario. But the bottom line is, when combined with this current economic situation we find ourselves in with the tariffs, which the Federal Reserve has already said will cause more inflation, shrink the GDP, and possibly invite a recession, adding a debt default to that would be a dumpster fire within a dumpster fire within a crap sandwich that a dog peed on. Too graphic? So what can anyone do to stop the United States from defaulting on this debt or even hitting the debt ceiling? Well, Congress has three options. They can increase the debt ceiling, they can suspend the debt ceiling, or they can get rid of the debt ceiling altogether. The option the Republican-controlled House and Senate has now agreed on, at the direction of President Trump, is to increase the debt ceiling somewhere between $4 and $5 trillion. We will not know for sure what that number is until the Republican-controlled House and Senate can pass a joint budget resolution. That process is ongoing right now. I will keep you posted on that. But
all right, so there you go, guys. This is a whole nother ball of wax coming down the chain on top. Yeah, she is terrified. I watch her at night before I go to bed, and she gives me nightmares. She's really good at breaking this economy stuff. You guys have no idea how much research I do to understand all of these angles and facets and nuances of the macro side. It's insane. I understand why a lot of people don't jump into it. It's overwhelming, but I do think that what she's talking about is something that's not really even on the scale yet because they don't have a timeline on it. So, if we come in and we have some type of lower tax amount, that could lead to higher taxes, or if we have enough, that might actually give fuel for Trump to go, we need to lower taxes. It's really going to be interesting when all of this comes in. But if they raise that debt ceiling by $4 to $5 trillion, where's that money come from, guys? What does that do to everything? So again, another facet to add on to there to why it's a bad thing going on. Not to mention they have moving goalpost and redefining definitions. Fact, bro, fact. So yeah, that's I just wanted to bring that up for you guys. Show that video. I was watching it last night and I was like, this is something that I wasn't even paying attention to. I knew that we did the resolution, the extended resolution. I talked about it here on the show back in January, where Janet Yellen said we're going to do extraordinary measures. Well, that's the extraordinary measures, evidently, and the clock's running out on it. So we'll have to see there. OC, I did a pretty good breakdown on the news today. Do I have anything else? MicroStrategy. Want to talk about that? I got a whole breakdown on MicroStrategy here in a bit, but let's go check a look at some charts. Let's look at Bitcoin. Let's get into some of these alts. And if you guys have not been scared off by macro truths, then enjoy. OC, let's get over there and take a look at it.
Let's get started. Sorry for that. I thought it was on dark mode. Let's take a look at first the Y curve here. I want to counteract a little bit of that bearishness, but also be real on how bearish we are, right? But just a quick reminder that we could be into a Y-curve accumulation scheme like we were on this previous cycle, right? I mean, we will be defining that if we are able to actually close the gap. So let's go back in here and let's remember what we talked about yesterday. The CME gap that we got in here is not a for sure. All right, let me just tell you, it's not a for sure that we're going to be, if we close that gap, we're just out of the blue, right? But closing the gap will take us back to a big resistance in here, but also could be the beginning of a push through, right? That maybe take us to a new high, or at least for a double bottom pattern in here, right? So that's what I'm going to be looking at for a spring. Usually I'm going to be trying to jump into the first retracement of the spring and then fully on the second retracement of that spring. So what kind of spring am I talking about? Well, let me show you right here at the previous chart. So let's get started. Right here, I have, here, right here, I have what I believe that this could be the Wyckoff, the Wyckoff, come on, the Wyckoff accumulation scheme. That was the word, the scheme. So the range, the V-shaped recovery, and then we can define the range in here. So this low is lower than the rest of them, right? So maybe if we can get back to the dynamic reactor, we are also going to be breaking inside this previous megaphone, and then breaking the megaphone into the megaphone usually means that we could be going at the top of the megaphone. What would that mean? Well, that would mean that we're going to be breaking the trend line here that it's already broken, this first line, and then we're going to be going for this secondary trend line here that has not been broken, all right? So it's also a breakout, retest, and off we go. What would the failure be? Because look at how is this candle looking in daily. It's not looking bullish at all, all right? So let's keep our foot on the ground, and let's also see that if we are not able to break above or inside this pattern here, we most likely are going to be having a breakout, retest, and off we go to lower lows. How low? We have been looking for these areas for a long time. Let me give it to you right here. And we could even go somewhere between 72 and I would say 60 something. So I'll be aiming to 63, which is half of this whole place, right? I mean, there's a real chance that we can even go lower, somewhere around 48K, but I would not be talking about 48K until we start breaking the 72 mark. But so far, bear in mind that we could be having a secondary flip of the real, secondary test of those supports somewhere around 72, and still be going for that double bottom breakout retest, all right? So something interesting that is also happening in the 4 hour is that we could, if we are lucky enough to make a little pop in here, we could be breaking above the zero line once again, and being above the zero line usually indicates that we have that little bullish breakout or that bullish momentum to start pushing above the dynamic reactor. So let's see which one of those plays out. But so far, we are on a possible spring from an accumulation scheme, or we could be going into a megaphone breakout retest. So how do we make money on this? Well, then we need to be patient. How patient? How far? Well, we're very close to it. If we break above, most likely we're going to be going into the megaphone, or if we bounce from it, well, then we're going to be going lower. So prepare your wallets, because most likely within this day and next one, today and tomorrow, we could be having a confirmation where we either rolling back down or continuing upwards. So far, everything is pointing at bearish, bearish, and bearish, so rolling back downwards. So just so you guys know, that is the bullish takeout, but also without ignoring the bearish state where we are at this point. Passing it over to you, Piper.
Yeah, something that I'm watching here is the S&P, guys, and we did get this rollover here, very sharp fall off. And I told you guys this level, I think it was Monday maybe, and I was talking about the first line in the sand for the S&P would be based on this support line. Look where we wicked down to perfectly and got our bounce. It's right there on it. So I am watching this bounce, but I'm not seeing this recover very strong, to be honest. This is a weekly candle. We're almost at the end of the week right now. We're not almost at the end of the week. We still have the week ahead of us, and we're only just getting into the week right now. But I would have to say that if this thing gets up here to about this level of about 56.83 and rejects. So let's go ahead and put one there. Let's go ahead and put a nice little line there in the sand. That's going to be the top side here that I would be watching for. So let's make this one red up here so that we can have that to go off of. Because I'm going to be watching this closely. I do think that we've talked about the historics of recessions. Let's go back in there and take a look. Let's go to the monthly. We've talked about these recessionary timelines and how price reacts for pumps, right? That there's rallies. I said, look, when we have these drops, we will have these rallies that take place like we had right here. From this top to bottom, that was a drop of about 20%. And and then we came back on this rally and made a lower high, but that was like a 14 to 15%. If you guys are looking for opportunities in your crypto to maybe take some profits off the table, that's what I said to wait for. But right now, we could be setting ourselves up for one of those. I do think that this bounce that we have here, let's put that in perspective. It was like 20% downside, 14% upside. That's a 21% downside. Let's go in and let's move this upside 14%. Yeah, you would be looking somewhere in the ballpark of that range that I'm talking about. And so that would be in comparison, because we know when the S&P does this, Bitcoin does that, there's a correlation there of sentiment, right, moving the market. So that could give you guys those opportunities that you can get into that. Another thing that I wanted to point out here was we talked about the 786 yesterday. We are right now, it looks like we're getting a bounce damn near on that 786 platinum pocket, which could give a little bit of hopium, but again, 88 maybe for our top side for another rejection down. And then at that point, we have even less distance to hit that 786 and break it. So watching those closely. The big thing that I do want to point out, though, is if we come over here on the monthly, and I talked about this yesterday, I've been doing a little more research on it. I talked about this yesterday on Crypto Princess's show, is going to be the MVP oscillator on the monthly, because I'm seeing something that's scaring the bejeebies out of me. Yes, Piper gets scared sometimes, even though I try to be prepared, but it's not for me. I'm set. I'm out of the market, right? I'm DCA and weekly, but I am seeing something on the MVP oscillator monthly that makes me scared for others who did not maybe take those signs and those live streams and run with it, right? So it is the cross here on the signal line of the monthly MVP oscillator, and you guys can see we're not getting any even light green candles. There's a light green candle there that before we went into the bright green, there was some signals here of the darker candles. We're not even getting a dark candle here, giving us indication that we are hitting the bottom right now. And so with this getting ready to cross and this screaming, yep, no bottom indication in sight, I want to show you guys what this looks like when we go back historically. Here, look, sir, what do you got on that I don't want on? Oh, let's turn all that off. There we go. Perfect. Thank you. Let's get rid of you too. There we go. Let's go back and take a look at what happens, how much we fall when this finally crosses. So we have one here that occurred back in 2021. It crossed right there. That's where it crosses, right there. So let's go over to that and let's measure that fall down, because that was a pretty substantial one. That is going to be, we had a little pump up there after it, so I'll leave that pump. So we had a little pump after it, but it still ultimately, it ended up in a 59.55% downside move, okay? Let's go back over and check out this one here. This is a very small little move that we had here, right there, and that's going to be off of that pump. That was a 57% move to the downside. Let's keep going back. We have another one right here. Right there is where we crossed. That is a move to the downside of a 67%. And now our last one that we have on this measurement is going to be there. And that was a move to the downside of 73%. So you guys can see, pulling these measurements on the monthly and looking at where this thing crosses over has led to 50% plus on our downside move. So if we get this cross here at the end of the month, guys, and we'll know here on about 20 days from now, we could be looking at a devastating fall for the market to take place still. Like I said, we're not seeing any bottom indications on the MVP oscillator that we typically get, even if it's mid-cycle. We're not seeing any of the indications that we're weakening. Matter of fact, if we go back there and look, you can see the RSI on the monthly, we're just at the 70. I mean, look, this thing still has all of this downside to move. Back here, again, when we had it here, we were up here in this range, still had all that move. This RSI heat map on the monthly still has a long way to go. This cross tells us a bad story. This signal cross tells us a bad story, and I just want you guys to be aware. It's not my army showing. I'm not scared for me. I'm prepared. I'm out of the market. I would love to see all of this happen, but I know there are a lot of people out there that have they wanted to take their profits. They wanted to have this money to reinvest, and then they got caught, off guard. And I don't want. A lot of people are going to get hurt. This is going to crush people's souls in the crypto space, and my heart goes out. So I'm scared for them. I'm not scared for me, Buck. Always attacking my army side, bro. We are the king of logistics and planning. You guys are good at one thing only. Go pull triggers. That's all you guys do. All right, OC, your thoughts, man, on this chart. Like when you look at the minimum downside, 50%. What are your thoughts on this, man? Because the MVP oscillator has never, ever failed us when it comes to these high time frames on the monthly. Your thoughts?
Well, that is a concerning. That is a concern. Not gonna lie, that also worries me a lot because that would mean that we were gonna be having a lot of bearish news in here. So that means that most of the crypto space is gonna suffer a lot. Not only that, for that to happen, and with the economy as we are seeing, I think it will have some breaking news to actually just give that little itty bitty push that Bitcoin needs just to fall off the cliff. Yeah. So, hey, there we go, right? Here's the help. So we just need to be prepared, as Piper mentioned, right, guys? Remember, always set your stop loss. If you, for some reason, this is not financial advice, all right? If you, for some reason, right, all the way downwards, don't worry. DCA as you go downwards, put it into a separate bag. And then when you're all the way at the bottom, when we see the oscillator, MVP oscillator, hitting some bottoms, well, then you know that you can reinvest that or just manage it in separate bags, right? That way is much more easier, so you can not be suffering, not to be taking the top. Remember, don't worry, that has happened to all of us at some point.
It's true.
Where we mistakenly don't take profits where we should have. Don't bang on yourself. Remember that if you need that money, make whatever you need to do now to save that money or as much as you can. Also, that doesn't mean sell, right? That means risk management, all right? That means risk management, and that will maybe take you within profits, even in the worst case scenario. The only thing that I want to counteract on that part, it is how did the 2021 cycle that I have copy and paste, because I haven't looked at it, reacted in with the MVP oscillator. Like, are we maybe on a possibility of that double top of, or maybe that dead cat bounce before the drop back down? I mean, we still have 20 more daily candles, so maybe we can be seeing
our 50% pullback. Our 50% pullback between the double peaks in 2021 did not fire off any candles either. But if you actually look at what was happening at that point, there is a difference, and I'll show it to you here. Let me pull this up. So what OC is asking about is our double top pullback that we had back in 2021. So we had our pi cycle top that crossed there. We fell 55%. We came back and cleaned out the liquidity of that previous high, and that was our new top, right? We came back in on that. And if you look here, we had no green candles at all. But I want you to look at the difference of what was going on in that period when we hit that bottom. It went and started to curve. We got this, like, it looked like it was going to cross, but look at this drop that we came in for that. This is why everyone says this was an extended dead cat, over-exaggerated dead cat bounce, because we actually created this divergence here, right? So we're not looking at this being like that. This is actually just a wave. And typically when you look at the waves, when the waves do their thing and start to cross, we typically do get that pull down, unlike what we saw back here with this big swell and then this little small wave. There was no volume at all for this to take place. So, but there are some commonalities. We were down in the 70. It was sort of coming in on a pinch, but not like it is right now. So it's same but different but same, in my opinion. And it is a possibility. There is some hopium right there. We have no green candles at all in that period of time, but we had a much more defined fall of the wave here, giving us that momentum on a swing, right? The slingshot trajectory there kind of gave us that exaggerated bounce that we had there. So, which just came back in for
maybe
a liquidity
before
sweep.
We run out of that chart, could you maybe take a look at, we're on a weekly, right? Or monthly?
This is monthly.
Could we maybe just take a look at that same area on the weekly? just
Yeah,
to see if we
weekly's
have some
firing
kind of
off.
fire up.
Weekly's been firing off this entire
I
drop.
see.
So if we go back and we look at 2021 on that, we had that also, and it dropped the
did
whole
also.
time. Yep. So yeah, this is looking, on the weekly and absolutely firing, but the monthly is the one that has been a definitive telltale for us. So, I mean, could we get another wave here like we did back here in March? Absolutely. But as of right now, it's cause for concern. Don't be scared. Be prepared. OC, let's kick it over to check out this market chart. I want to talk about MicroStrategies. Yesterday, there was a post that I dropped. Let me find it here. There it is. Yeah, this one here, I talked about this yesterday. I dropped this thing. It said, and someone put this on X, and it said, we may be required to sell Bitcoin. And so that lot of FUD coming out on this. I said, holy balls. And I said, is MicroStrategy going to sell Bitcoin? Full link here. To be fair, it's an SEC disclosure, so likely has to be in the verbiage, but it's enough to scare people and get them talking in the space. Beware. So let's go talk about all of that and bring this up. Because that article, guys, that clip comes from this report here. And I want to change the color on that so that you guys can read it. There we go. So this is a report to the SEC. This is on sec.gov for strategy, Michael Saylor's whole plan of what he's doing with Bitcoin and everything like that. And so I had ChatGPT do a little breakdown on it for me and said, hey, can you tell me about this thing, right? And so basically what it comes down to is that has to be in there, but their average right now, if we take a look at this, their average right now is aggregate Bitcoin holdings, 528,185, $35.63 billion worth. Average price, 67,458. But if you go down and look at what they have on their contracts, on their convertible notes, they have their issuance date here, going back to September 2024, all the way to June 2024. All the way to February 2025. Okay. These dates of expiration, guys, are all the way out in 2028, 2029, these are maturity dates. So they won't get called until that point. And so I said, hey, take all this data, ChatGPT, and let's talk about what does this mean? And so basically she did a pretty good breakdown on this. They would only have to sell their Bitcoin if they have to cover bills or loans. They can't raise money in other ways, or Bitcoin drops so much that lenders start knocking and want to close out early, okay? But as of right now, they can offer stocks for those convertible notes, but people can come back and go, we just want to go cash for right now. Remember those convertible notes, IOUs? If any of those can't be turned into stock and have to be paid back in cash, they might need to sell Bitcoin to get that money. Very unlikely, though, according to ChatGPT. So I said, hey, ChatGPT, would a prolonged bear market or recession force them to have to sell their Bitcoin? And she said, yep, you're hitting the pressure point. So let's get in there. MicroStrategy strategy is basically buy Bitcoin, hold Bitcoin, borrow against Bitcoin, repeat. But if Bitcoin stays in a long, cold winter, like a multi-year recession, level bear market, here's what happens. Bitcoin price drops and stays down. That collateral they use for loans starts to lose value. Lenders may say, hey, that $1 billion loan you backed with Bitcoin, it ain't worth as much now. We need more collateral, or we're selling some of your stocks, your stack to protect ourselves. That's a margin call nightmare. MicroStrategy does still sell software, not much though, but they would be able to make revenue from that. I would say if we're in a bear market, probably not selling too much of it. If they can't pay employees or services, I think they would let that business go and hold on to the model of selling convertibles before they would sell their Bitcoin on that one. Credit markets dry up. Right now, they've been able to raise billions using convertible notes with almost no interest, like saying, hey, investor, give me money now, and I'll maybe give you stock later. In a tight credit environment, like during a recession, investors are not so generous that cheap debt will vanish. So if they can't raise more money to survive the winter, again, Bitcoin might have to go. It's a feedback loop. Recession goes to lower revenue plus tighter credit. Bitcoin bear market goes to lower collateral value. Both together, they might be forced to sell Bitcoin just to stay alive. It's not guaranteed. They're clever and have avoided it so far, but the longer and colder the market, the more likely the diamond hands melt into survival hands. And so pretty good breakdown here from ChatGPT. All of that news coming out there yesterday. A lot of fun. I was at first like, oh, Lord. But then, yes, as I read into the actual document on SEC.gov. It's pretty much just standard verbiage that, yes, we are aware that if worst case scenario happens and all options are off the table, we will sell this Bitcoin in order to get you to approve and not fine us. So just be aware of that, guys. As of right now, it looks good, but the longer this contraction of the economy and everything happens, the more that does move up on the table. Because remember, as it goes down, and people don't want to buy anymore. People start to get really tight with their money. It means less money for them to continue to play that margin call game. So just be aware. Yeah. They did not buy last week at all, though, by the way, just so you know. So they have quit buying as of right for now. So we'll have to see. OC, that is what I got there. We got about 9 minutes. What else are you watching on the charts? Copper, how's it looking today? We know copper is one of those recessionary indicators, and we've been seeing it go down. And when I'm looking at copper, it looks like it's up a little bit today. But anything that you're seeing on the charts anywhere, it don't have to be copper. I just, as an example, anything that you're seeing that's causing you to take some interest, peep some Mexican spaghetti eyes on. What do you got for us, man?
Absolutely. Let's get started with F Ethereum, right? So hashtag F Ethereum here. So let's take a look at what we were talking about yesterday and how it played out. Again, it doesn't disappoint, but we were talking about this area right here and how it could be just maybe bouncing up. Why is that? Because, well, let's face it, we had a little range. V-shaped recovery possible. Wyckoff is not as beautiful as I would love to see it. Why? Because I would love to go somewhere very close to this little range before, or even something like that, before I even jump back in. Remember that we were expecting, there we go, let me just get rid of this. Expecting for a possible entry of a short. We did not cut it. That's fine. What is our next entry area here? Well, then let's bring up our support and resistances. So let's get started with this one. Seems like they're too far away, 4 hours, which is moving so violently. So at this point, I'm going to be using my predictive ranges. So let me just bring them up. Here's your daily support and resistance plus predictive ranges. There we go. So previous low or previous weekly low, we are on support at this point. And well, the next one will be a bounce to previous monthly low in here with this trend line. In fact, it will coincide with the area that I want to see it bounce. If we just fell out of this zone, most likely we're going to be doing a double bottom. If we have that double bottom, well, then I think we're going to be lucky, because we then can be going straight forward for the previous monthly low. All right. So remember, buy low, right? Sell high, and then rinse and repeat, rinse and repeat. I know it's not as easy as it appears, but sometimes you need to take the risk, and that risk needs to come with a stop loss or any kind of risk management. All right. So what's going to be our next entry? I would say preparing for a short. I want to see it going back up and then have a rejection. If I have a rejection, if I have a rejection here, I will be willing to take the next short all the way down here to this area. But if instead I see a bounce, I will be willing to take this long all the way to previous monthly low. So that's what I got on Ethereum. Let's go visit Litecoin. Litecoin is been bouncing exactly the same way that we were expecting, right? If you take a look at what we were analyzing for, right, or speculating for, it was a breakout retest, right? Off we go. So once again, for maybe a double bottom, seems like we are on the way to do that. OM, exactly the same. Look at that, following the same pattern that we're thinking. So we are basically right on spot for a possible entry on OM. Look at that, tiny candles, red. This could be a good, very small short position. I'm not going to be taking it because I'm in the show and I have a class up next. So, but if you want to take it, remember to use a stop loss. And then finally, BNB looking like the same. Everything just looking the same. So with the V-shaped recovery, going to previous resistances for then maybe start making that Wyckoff accumulation scheme. Other than that, that's basically it. Let me just revise or take a look at ADA lastly, because ADA, I was expecting an entry. And guess what? I already got it here. So perfect. It was a very scary entry here. It just keep going downwards until I have the flip of the ribbon right there. Right now, I'm on profits. We need to start moving our stop to entry, especially now that we have a complete candle, both wick and body already into the green. TP number one is going to be right now, or let me see if I can wait a little bit more for this TP number one to be taken, and then TP number two, as we were expecting. This was comes down with the dynamic reactor and the previous support. So yeah, I mean, we were aiming at 69 at this point, but right now we're aiming at 66. Not that far away, but that dynamic reactor rules the taking profit. So that's what I got on the altcoin side. Let me pass it to you.
Yeah, so this is for Lunar Beaches. He said, Piper, I have not been here the whole show. And since I throw so many things at him on his live stream, he threw something at me, I think. And it's a great question. He said, why should I not FOMO in? He said, tell me why I shouldn't FOMO. I haven't been here the whole show. Let's talk about it. I'm going to show you why. Because right now, we have now set a lower low. Okay, we are getting a curvature here, and before this candle ever went this far down, I said it very likely are going to be coming back down. We are sitting beneath hard support that is now resistance. We have major resistance right above us, and all you're going to do is get into the FOMO, and then you're going to get another leg down, in my opinion. Why do I think that? Because when we look at the daily, we can see that money flow here. Yeah, we're sitting on some decent support right now, the 300-day, but money flow is coming down. On the weekly, we take a look here at that. Higher time frames, money flow is coming down. Okay, volume is dropping also. Take a look at the 2 week here, money flow still coming down. So what we're seeing right now is that we have higher time frames telling us we are pushing down right now, but with us being underneath resistance, with money flow coming out, with the volume dropping the way it is, very likely you're going to see lower legs ahead of us. So if you are looking to FOMO, why does it have to be now on a green candle day? Why can't it be, once we get a return above support, start to set higher highs and higher lows on the daily time frame, and then give you that, on that retest of a new higher low, give you that lowered entry, not necessarily the bottom, but at least in the right direction, because you can always DCA on the way up on retracements also. So there you go. That's my answer to you. That's why I would not FOMO. That's why I recommend you not FOMOing, just to make sure, LBC, come here. Don't FOMO yet. Thank you very much. That's all I got for you. Let's go get out of here, OC. Let's zoom this camera. I'm gonna need you guys to back up off me just a little bit. Just back up. Thank you. There you go. Let's go ahead and let's go check out no other shows. I went and looked. No joke, man. No joke. I went to go look where I was going to redirect you guys. I want you guys to see this. Randy Hipper is probably the only person I would push us to right now. Why? Because she's doing a 20,000 subscriber celebration. We'll try to get over there maybe. I don't know if she's still live or not. This is really late in her setup, but I want to show you guys why I'm not just pushing to any old channels today, because we have, here's our choices. Bitcoin recovery imminent, exclamation point. No, it's not. Is the bottom in for crypto? No, it's not. Emergency Fed meeting. That was set up on the 3rd. It wasn't an emergency Fed meeting. It was a closed door meeting. And the damn thing took place yesterday after being scheduled on April 3rd. XRP to $12 when banks go all in. No, probably not. Probably not on the banks going all in on XRP. So yeah, we're not sending you to anywhere, man. Nowhere. None of these shows are starting immediately afterwards. And the ones that are live right now, besides Randy Hipper, and I'm not even sure if she's still live, we will see. Hopefully she is. That's the only person that I trust out of all of those right now. Guys, we are heading out of here. OC's got a class to go do. I appreciate all of you guys for joining us today. We will be back here tomorrow morning doing this all over again. So 10 a.m. We will see you guys here breaking down these markets for you guys, because that's why I'm here every day. I appreciate all of you guys. Trade safe. Don't FOMO in. And lastly, use some risk management. OC, thanks for being here. Guys, we'll catch you tomorrow. Peace. I don't know
rolling out the wheels FOMO. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the army piper acolytes. Trade flag at the soul, train ready. What a line from OCI, former Mexican spaghetti. Yo, crunch crypto with a deep dive to project dime. And if you like the visual powered by Car Prime, then you will part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels FOMO. Sound off.
To get with them, the ZTS rhythm. Alexandra.
Yeah, that's my alumni, you know what I mean?